Hi guys, today we are receiving Yoni of the Crypto Volatility Index, a new crypto project that brings derivative to DeFi. Welcome, Yoni.
Hi, Julien. Hi, guys.
Yeah, very happy to have you. So can you first briefly introduce yourself, Yoni?
Yeah, so I'm a software engineer and have an MSc in computer science. In the last decade, I've been building financial applications. I previously led a team of engineers at the risk management department of UMTB, which is an Israeli bank. And later on, had a startup of my own in the field of algorithmic trading. And I've always been captivated by the financial markets and what makes them tick. And I think it was in late 2017, I started reading about Bitcoin, Ethereum. It was literally mind-blowing. The dynamics of proof of work and proof of stake, the different pros and cons between different approaches. It was a new level of the same ingredients that I love about the financial markets. So I had to basically read everything I can about Ethereum and Bitcoin, and immediately started learning Solidity and trying out some code. So right at that time, I heard about Coty, which I joined after a few months, and I've been working here ever since.
Wow, okay. Your story really remind me of my story because I also used to work on finance and in finance, and then I switched to development. So yeah, that kind of profile, of course, is super attractive for the DeFi industry. And like you, when I heard about blockchain, like for months and months, it's all I could think about. I think we're a lot like this. And so you work for this big company called Coty, and one of their project is a crypto volatility index. So can you tell us more about this new project?
Yeah. Basically, it was I think June last year. At Coty, we were looking at how DeFi is rising, and we're very excited about the possibilities it opens up and the new products that can be built. And in general, in Coty, we have a very pragmatic approach. We really aim to solve real business needs and something that is really useful. And we are thinking, what can we do in this segment that relates to Coty's mission? And some kind of maybe a hedging tool for merchants that use Coty. And then Nir Halwani, which is Coty's CTO, he said, why don't we build a decentralized version of the VIX, of the volatility index of the S&P 500? It can be a very interesting hedging tool. And we are all like immediately, definitely, that can be so useful. And also looking at DeFi at that time, it was right before DeFi summer, we saw there is absolutely nothing in the derivative segment. So the industry would really, it could really benefit the industry. And ever since then, we've been building the protocol, and it's actually live on Ethereum mainnet since January, and expanding very fast, gaining a lot of traction since then.
Okay, so Yoni, excuse me, I'll stop you quickly. So for people who never heard of the VIX index, so that's the famous volatility index on the S&P 500, also called the fear index. So when the markets are very volatile, which means the price change quickly, this index goes up, and conversely, it goes down when the market is very stable. And so can you tell us in DeFi, who would be interested in an index like this?
Yeah, so in DeFi, as you know, volatility is a very big issue, even much more so than in regular financial markets. So it can benefit anyone that is looking to hedge himself from volatility or profit from volatility, take trades related to it.
Okay, so there are two sides of the market: people who buy volatility, people who sell it. So typically, would it be a retail investor who sell or buy volatility? Like what kind of actor and how practically they would use your index?
Yeah, so I would say there are basically two ways to use it, and each is suitable for a different market participant. So one way is to open a position on the volatility index if you're expecting the market to be volatile. So when volatility occurs, the index will rise and position holders will benefit. So we just had a very interesting example just now with the Coinbase listing. It was last week, I think, and it was regarded in advance as a significant event, very significant event for the crypto markets. So right before the listing, the CVI index began to rise as the market was expecting volatility to increase around this event. A possible trade in this case was to buy the index before the listing. Another possibility to profit or to profit is to invest in a different DeFi instrument and use the CVI as a tool to hedge against market volatility. So in case the market would be volatile, both to the upwards or downwards, the CVI would rise. And this can be very beneficial, for example, for liquidity providers of certain pairs on Uniswap, as it can serve as a hedge for what's called impermanent loss. So opening a position in CVI is suitable for anyone that expects the market to be volatile, and both as a hedging tool against volatility. Now, on the other side, it's possible to provide liquidity to our platform. So we have a platform that allows you to take trades on the CVI index. And as with every market, there are two sides. You have volatility sellers and volatility buyers. As in regular financial markets, you have like many institutional players and funds that are selling options. Some of them are buying options for hedging. So in CVI, we have liquidity providers. That's the other side. They are the volatility sellers. So as time passes by, liquidity providers receive funding fees from the volatility buyers. This compensates them for the risk they incur for covering any profits of the volatility buyers. This is how the market reaches balance between the two sides. So if the index drops in value, the liquidity providers gain a profit. And also if it stays in place for long periods of time without moving, they also profit as they receive a funding fee paid by the volatility buyers.
Okay, so practically, if I want to bet that the volatility is going to rise, can I just buy the index? So is it just a token on some decentralized exchange, or is it slightly more complex?
Yeah, so that's a great question. Right now, in the last 3 months, it's running as a platform that you can access the platform and open a position that would have, in that way you can be long on the index. And we're going to have, working right now, going to have a version 2 coming up later this quarter that would make things even better, that you would have different kinds of ways to do it. And something that's been working on, and there will be different UXs that allows you to do it. Some will be very, very easy for those that don't want to go to a platform and open a position.
And in terms of potential returns and risk, how would you compare this with just owning a DeFi token?
Yeah, so my cat is here coming to the...
No problem.
Loves crypto. Just put her here.
Sorry, yeah, it's the joy of working from home.
Yeah.
Yes, I was asking you, like, how would you compare the risk and returns of for example, buying volatility versus just trading a DeFi token?
Yeah, so it's a very interesting concept that you can use it as a hedging tool. So I would say the best thing to do is to regard it as part of your overall portfolio. How is this investment? How does it fit in? If it's something that you would like to take a short-term bet on volatility, maybe you would take a certain position. If it's a hedging tool, you can fit it to cover any possible losses you would have if there would be a volatile market.
And do you, out of these two use cases, like either speculation or coverage for other position, which one do you think will be the biggest use case?
Basically, as I see it, the whole derivative segment right now in DeFi, it's quite unbelievable that we've been past DeFi summer and DeFi winter. A lot of the industry is expanding so rapidly, and the whole derivatives market is not there yet. It's like we're so early on. So I would say there are so many ways you can use it.
Yeah, 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 because I think so far, like with DeFi, we haven't seen anything, and we've seen a big growth, but this can be totally dwarfed by a derivative DeFi, which in traditional finance is much bigger than the cash market. So, do you think maybe in the next few months we'll have a huge influx of money in DeFi with all these derivatives projects?
I think we're already there. We're seeing the traction that we have in the last few months, and we're seeing VCs entering this area. A lot of investments going on. But I would say, like, if you look at the users of the platform and users of volatility buyers and sellers. One second, my cat here is like really wild.
That's so good. Hi, the cat. Wow, it's very fluffy.
Yeah. Needs to relax.
Yeah, he wants to be on YouTube as well.
Yeah.
So you think this is going to be a big market? So right now, the website I use to measure what's happening in DeFi is DeFi Pulse, but I feel like maybe we need another DeFi Pulse, but for derivative stuff, but it doesn't exist yet. I don't think so.
And that's actually a great idea. I think we would definitely need that with all the traction that's going on. We're seeing a lot of interest in derivatives, and I can tell you, as a developer, you know, like developing in DeFi is so exciting. There are so many opportunities, so many things to build. It's quite remarkable that in the segment that we're in, the CVI, the derivative segment, it feels like 1.5 years ago. It's like so early on, and we're seeing a lot of institutional players, a lot of VCs coming in, and we'd like everyone to get interested in it. So everyone are already into it.
Yeah, no, I'm super excited about this this new part of the DeFi adventure. And can you give us some technical details of how your volatility index work with the smart contract? I guess there are some oracles. I mean, my audience, they're finally super interested in this.
Yeah, sure. So we are partners with Chainlink. So we built what's called an external adapter, which is code that is run by Chainlink nodes and is aggregated by different oracles on chain. And the external adapter, what it does, it's basically it calculates the index, and then the index is sent on chain via Chainlink oracles, and it's the feed that powers our platform.
Okay, so you use Chainlink external adapters, and so I understand that the heavy lifting for the calculation of the index is done outside of the blockchain and imported through Oracle, which simplified things a lot, because in Solidity, this is such a primitive language, it'd be much more challenging to do all these computations. So I think it's quite smart to do all of this computation off-chain. And so it seems like in terms of smart contract, it's not as complicated as I thought, because basically the heavy lifting is done outside of the blockchain, and then boom, you import the index, and that's it. So after, it's more about how you can create some layers so that people can buy and sell this index simply.
Yeah, so the first part was building the code that is sent it on chain. So that's also it has a lot of elements to it. What sources would you take, and how would the calculation be done? There are different ways to calculate it, and it's all actually open source. You can have a look at Chainlink's repository, and so there are different ways to use different sources in that regard, and a lot of the heavy lifting and the Solidity side on the blockchain is creating the platform. So now you have an index and you want to trade it, and when you have a tradable instrument, the market would never be in balance. So creating a balanced market in terms of supply and demand for any instrument and a synthetic product is quite complex, especially for volatility. So if you look at our code, it's like we have a lot of infrastructure that is targeting how to do this best.
And since everything is more complex and maybe more custom, would you guys see any use for NFT for representing some position?
Definitely, it's something we thought about. Actually, we're seeing so many products that we can build on the platform and on the tech that we built, which actually became quite complex. You can have a look at our GitHub and see the code. It's very robust. So while building it, we were thinking, okay, this can be used for many more products related to volatility. And NFT could be one, but there are others that we're currently working on, which will be part of our V2 that will come later this quarter.
I think one very important question for you guys is whether you want to build a protocol that is used by end user directly, or if you want to be more of a sort of backend that is used by other project. Because, for example, this could be the backend for some insurance protocol that are a little bit higher level. Some protocol that say, okay, I'm going to give you some, provide you some insurance for impermanent loss. And you provide this. So have you thought of this sort of positioning?
Definitely. We're also in touch with some projects in this regard, and it can be a perfect fit for those projects.
Yeah. Well, this is super exciting. I really love your project, and I think that you guys are looking for some to hire some developers, right?
Yeah, so as we're expanding and seeing like our development pipeline is so packed with a lot of features, and we're actually recruiting developers, interviewing new developers every day on our local site. And we're also open up to offshore developers. So I know your channel have a lot of viewers that are developers. You can surely reach out to us on Discord and our Telegram group.
Okay, so I'll put all the links to your project in the description down below if some people are interested. But I'm telling you, like, this is the future of DeFi that is being built. Derivatives in DeFi, this is the next big thing, and this is going to be much bigger than what we have now in DeFi. So yeah, if you are into finance and programming, this is for you. Thanks, Yoni. That was super interesting. And I wish you good luck for Crypto Volatility Index.
Thank you. Thanks, guys.
Bye-bye.
Bye.